Good evening, everybody. It is Friday, the 10th of January, 2025. This is Shannon from Alpha Trends, and we had a rough week for the markets here. The things that were up were energy and energy stocks and oil itself. Otherwise, crypto got hit, as did major markets, and were down for the most part for the year. Semiconductors still holding on to a little bit of a gain, as well as energy names, and Bitcoin with a little bit of a name. But let's take a look at these charts and make some sense of it. The S&P 500. We continue to see the pattern here that we've been noting, which is lower highs and then lower lows and a new lower low here today. As I've mentioned, I think it's highly likely we continue down towards this anchor from the August low. We are below a declining 5-day moving average. Monday, we get rid of this data in the 5-day moving average calculation. That means even if the S&P rallies up to the 5-day moving average, that 5-day moving average will be declining. So you've got to continue to look at this market with a high level of skepticism for the long side and understand the longer term time frame, the weekly time frame. It's still in a bullish phase here on the weekly time frame, but we're experiencing just a normal correction. I'm not calling for a top here. It might end up being a top, but I'll know when you know, which is well after the fact. For now, we have to treat it cautiously. We have a pattern, like I said, lower highs, lower lows. Is this the third and final wave lower? Maybe it makes a low next week down here, but I'm not willing to get long aggressively until we're above a flat to rising 5-day moving average, and we're not extended. We were extended when we were above the 5-day moving average right here, and that anchor was in the wrong place. But we were above the 5-day moving average, but we were extended in there, and that didn't present a low risk, high probability setup. So it's better to be on the sidelines and cash sometimes rather than being involved and wishing that you were in. The NASDAQ also has continued with its pattern of lower highs, and now we add another box here to say a lower low to go along with it. Below a declining 20-day moving average, the 50-day moving average is advancing and will throughout the rest of next week. But we're below the anchor from the election. We're below a 20-day moving average. We're below a declining 5-day moving average. And this pink here is the week to date. Blue is the year-to-date anchor, which is also going to stay on this daily chart for the rest of the year and into next year. The year-to-date anchored VWAP is important from day 1 to 200 at day 252. That's typically how many days there are in a trading year. 252 doesn't mean there will be this year, but the bottom line is it will be important, and you'll see it on my charts for the remainder of the year. Meanwhile, back to this market, I wouldn't be surprised to see a test of that 500 level. And what we'd really like to see is a little undercut, a little shakeout below there, start to stabilize, and then maybe we could look for a bounce trade. And I only say a bounce trade because we're below a 50-day moving average. We're below a declining 20-day moving average. Earnings season is still ahead of us. The Russell 2000 continues to just trade horribly, from a price-wise. From a perspective of market structure, it's doing exactly what it's supposed to do. This is what we spoke about last week, that it's highly likely that it would come down into this range, that this was looking like a bearish flag in here, and it got rejected right at the declining 20-day moving average, which is below a declining 50-day moving average, below the anchor from the election, below the anchor from the high. So it should be heading lower. It should not surprise people. People who have been trying to find the bottom in here have been wrong, and you just don't look for a bottom in a market that's in decline. It doesn't make sense. Don't buy the dip. And these aren't even dips. This is a pullback. This is a downtrend in the intermediate term. Wait for the evidence to develop. And of course, this market is getting hit because bonds are getting hit. And, everyone at the beginning of the year said, interest, the Russell 2000 is going to be great. Actually, that was the beginning of last year. Russell 2000 is going to do great because the Fed is going to cut 7 times. They didn't cut 7 times. They cut 100 basis points. But yields have gone much higher in the here's the yield chart. This is where we began our cuts. The bond 10-year bond yield was 365. Now it's 477. So this market, the Russell, the cost of money is breaking out. It's heading higher. You can't expect the Russell 2000 to be a buy in here. It's in a downtrend. It's supposed to be going lower. Why on earth would you buy this? Remember last week we spoke about, are you doing what you want to do for the beginning of the year? Are you actually going to be disciplined this year and follow those guidelines and resolutions that you made in terms of cutting losses, not buying risky stocks and things in downtrends? It's not too late to correct your behaviors. $10 a month. Get you a subscription to Alpha Trends on Twitter. I do a midday video and an end of day video every single day, in addition to a lot of other great information. The link is at the bottom of this YouTube video. Semiconductors looked like they were trying to break out. As we mentioned, we've been in this range, 237 to 265-ish, 263. We got up to the top end of that range. We broke higher briefly on the NVIDIA news, and then the market caved in. It's down to the anchor from the election. That's the orange line over here. It's at the 20-day and the 50-day moving average. 20 is the red line in there. 50 is the blue line. Orange is the anchor from the election. So maybe it stabilizes in here, but that doesn't make it a buy. NVIDIA, we saw exactly what it was supposed to do. And I warned about this the evening before, is that if it was to break out after this extended move, it was highly likely that it was going to pull back and to make a very tight stop. So if you had a tight stop, you should have been out up around 148, 449 and avoiding this. There's no advantage to being a buyer in NVIDIA that I can see right now. Maybe you draw a trend line that looks like this. Maybe it catches in there. It's definitely a level of interest, but we're below declining 5-day moving average, and that 5-day moving average is going to start to really ramp lower in the next two days as we get rid of that data. So no reason to look at semiconductors. Biotech's doing what they're supposed to do. They broke above this prior little peak like we were talking about, and they trapped people for a day or two, but then the market in a downtrend is doing what it's supposed to do. It's below a declining 10, 20, 30, 40-week moving average. It's in a downtrend. It's supposed to go lower. So it shouldn't surprise you when you get these gaps down. There's no reason to buy this garbage in downtrends. It looks like it's maybe heading for a test of the anchor from the 2022 low, which would bring it down to here at about 85.5. That's still that's another 5% lower. To me, it just doesn't make sense to buy this stuff. I don't understand the people who do it. We were talking about the high likelihood that that the financial stocks would come down and close this gap and test the anchor off of the August low. I still think it's highly likely it does close that gap, test that low, and then close the gap. So it's in a downtrend, lower highs, more repeated test of support, and then the eventual breakdown. It shouldn't be a surprise when these things happen. This is what I spoke about last week. It's what I spoke about on the Stock Twitch show on Wednesday. Every Wednesday at 12:15 p.m. Eastern. Follow me on Twitter, and you'll see the live feed. It's also recorded, and you can access that on Twitter as well. If you're not on Twitter, I don't understand what you're doing in the stock market, really. Some people have a problem with Elon, but get over it. The energy names continue to bounce here. I still think that the weekly chart looks damaging here. We're rallying up into this zone, this cluster of moving averages. So if you're looking at this and if you're long, just please be defensive. Raise your stop up underneath the most recent relevant higher lows, and that might be right in here. So if you've ridden it for a nice gain, it's getting extended. It's still got a declining 20, 50, 200-day moving average. Last year's anchor is right here. So leave that alone is what I would say. Bitcoin, let's take a look at Bitcoin. Bitcoin, here's what I sketched in and put it out on Twitter Thursday, is that it keeps coming down to the anchor from the election. That's the orange line. And the more times any level of support or resistance is tested, the more likely it is that it's going to fail. And here we saw this breakdown, which led from that failed move, came the fast move higher. And then we got another undercut. Now we're getting this bounce, which I sketched in prior to the bounce. I think it's highly likely within the next week or so that we come down towards this 88 level. I still have my core position, and I also have a bid in down near this level. I have a bid for more down here. If it comes down to this level and then bounces up to 92, I will sell most of what I purchased down here, thinking that maybe it's going to go down, and then I'll buy the more down here, thinking again that maybe it's going to bounce. I'm simply trading around a core position in the Bitcoin. I'm not interested in riding the whole thing down, but this is where we are in this market. It's a dangerous, tricky time. The stock's in downtrends. Why are you surprised that AMD continues to go lower? It's in a downtrend. It's a piece of garbage stock for now. Doesn't mean it will always be, but it's been in a downtrend. Downtrend stocks are the ones that continue to go down. A trend once established is more likely to continue than reverse. Have a good weekend, and I will talk to you next week. Thank you.